Hello and welcome back to Explain the Charts. Today, on October 21st, 2025, we are taking a deep dive into Amazon, ticker symbol Amazon. There is a fascinating and somewhat confusing story developing here, with major negative news being seemingly ignored by the market. We're going to unpack the headlines and then dive deep into the charts to see what's really going on. First, let's talk about the big news event. Yesterday, October 20th, Amazon Web Services, or AWS, experienced a massive outage in its U.S. East 1 region. This wasn't a minor glitch. It took down major platforms like Snapchat, Robinhood, and Fortnite, causing widespread disruption. Logically, you would expect such a significant operational failure to hit the stock price hard. However, the market's reaction was completely counterintuitive. Amazon stock closed yesterday with only a slight dip, and today it has actually risen, trading up around $216. This tells us that investors are looking past this temporary outage. Analysts suggest the market is more focused on long-term factors, such as AWS growth trajectory and its competitive standing in the AI space against giants like Microsoft and Google. Another huge event on the horizon is Amazon's third-quarter earnings report, scheduled for October 30th, which will provide crucial insight into these very questions. Other news items are also likely supporting the stock, such as the announcement of hiring 250,000 workers for the holiday season and the recent settlement of a billion-dollar FTC case related to Prime cancellations. This resilience is also happening within a broader market that is currently optimistic due to ongoing trade talks. Now, let's turn to the charts and see what story the price action is telling us, starting with the daily chart for the long-term perspective. Looking back, we can see Amazon hit its 52-week high of $242.52 in early February of this year. Following that peak, the stock saw a dramatic sell-off, finding a bottom in early April around the $161 level. That $161 mark is a critical long-term support level that investors should keep in mind. Since that April low, the stock has been in a steady, albeit choppy uptrend. It has formed a series of higher lows, which is a classic bullish sign. However, the climb has faced significant headwinds. We saw a major rejection near the $238 level in September, failing to retest the all-time highs. More recently, a very sharp drop on October 10th took the price from around $227 down to $216 in a single day. This established a lower high, a point of concern for bulls. Since that drop, the price has been consolidating, with the $213 to $216 area acting as a new critical support zone. Let's zoom in on the daily chart from August to get a clearer picture of this recent volatility. You can clearly see the massive gap down at the beginning of August after its last earnings report, taking the price from $234 to $217. The stock spent the next month and a half battling back to the $230s, only to be rejected again. Now focus on the last two trading days. Yesterday's candle, on the day of the AWS outage, is particularly interesting. Despite the negative news, it formed a bullish engulfing candle, opening low at $213.88 and closing higher at $216.48, completely reversing the prior day's small loss. This is a powerful signal that buyers are actively defending this price level and see value here, viewing the outage as a non-event for the long term. Now let's switch to the 1-hour chart to analyze the current short-term battle. This timeframe clearly shows the recent consolidation range. We have a strong support floor between $213 and $214. On the upside, we have immediate resistance at the $218 level, with a stronger psychological and technical barrier around $220. Looking at the price action from yesterday's outage, the initial dip was bought up almost immediately, forming a V-shaped recovery on the hourly chart. Today's session has continued that momentum, pushing the price towards the upper end of this tight trading range. A sustained break above $218 would be a strong bullish signal for short-term traders, opening the door for a move to test the $220 to $222 resistance zone. On the other hand, if the price gets rejected from this $217 to $218 area, we could see a pullback to retest the support at $213. Drilling down one last time to the 15-minute chart, we can see the intraday flow. Yesterday's session started with weakness, but buyers stepped in aggressively, establishing a clear uptrend throughout the day. Today's pre-market and open saw some initial chop, but the price has again found its footing and has been climbing steadily. The day's low at $213.59 is now the key intraday support to watch. Resistance is currently being tested right around this $216.50 level. A decisive push through here on high volume would suggest bullish control for the remainder of the trading day. So, let's bring it all together and recap what to look for. Your key support level to watch is $213. A break below this level on the daily chart would be a significant bearish development and could signal a deeper correction, possibly towards the $200 psychological mark. Your key resistance levels are $218, followed by the more significant zone at $220 to $222. Breaking through $222 would suggest the bulls are back in control, with targets in the $230s. So, what are the likely scenarios? The bullish scenario, which I see as having about a 65% probability, is that the market continues to focus on the long-term positives. The stock breaks through the $218 and $220 resistance levels this week, fueled by positive sentiment leading into the October 30th earnings. The bearish scenario, with a 35% probability, involves a rejection from the current resistance. The price then breaks down below the $213 support, triggered by either broader market weakness or growing anxiety about Amazon's ability to deliver a strong earnings report. The ultimate catalyst will be the earnings call at the end of the month. Pay close attention to the AWS growth figures and any management commentary on their AI strategy. That will set the direction for the next major move. That's our in-depth look at Amazon today. Thank you for watching Explain the Charts. If you found this analysis helpful, please hit the like button, subscribe to the channel, and let me know your thoughts on Amazon in the comments below. Finally, a quick disclaimer. This video is for informational and educational purposes only. I am not a financial advisor, and this is not financial advice. Always do your own research and consult with a professional before making any investment decisions. Trading involves risk, so be smart and be safe.